Hello, Archers. I wanted to continue our conversation about life insurance, and we are going to talk today about how life insurance premiums work. Check out my webpage at archerfc.com. But the reason that we're going to talk about life insurance premiums is because we want to understand how money is going into a life insurance policy and how it affects it and what the outcome is. So based on the last video, we talked about there's a couple different types of life insurance: personal life insurance, term insurance being the simplest. Your premium is going to fund the life insurance. Very simple. There is no cash value. At the end of 10, 20, or 30 years, you will receive nothing in return. Your policy will simply run out, and your coverage will run out unless you renew it. So that's why I say that you're just renting a policy from the insurance company. Now, whole life, which is a form of permanent life insurance, is probably the simplest and the easiest to understand. And we're going to break down our premium payments into thirds, just to make it simple, just so you can understand it. The first premium part of your premium payment each month is going to pay for the life insurance and everything associated with it. Your other 2/3 of your policy is going to go into your cash value. So at the end of the month, you have 2/3 of your money that you paid into your premium going into the cash value, and it's going to build up over time. Whole life insurance, at the end of the year, the insurance company will make a profit, and then whatever the year-end value of your life insurance policy, they will pay dividends based on that value, usually 3 to 6%. Very safe asset to own, low risk. Some insurance companies have been paying dividends on life insurance since the 1860s. So very powerful asset to own. And we'll talk more about whole life insurance and how to utilize life insurance to grow your money in a tax-free, as a tax-free asset. Now, the most misunderstood type of life insurance is your universal life, your variable universal life, and your index universal life. The reason being is that if these are not properly structured correctly, these type of policies will lapse on you. So your premium payment each month is going to go into a cash value bucket. Okay, this is your cash value, and your premium payment is going to go into your cash value, and it's going to fill up this cash value bucket. Okay, here's your money floating around inside the cash value bucket. Now, what's not really talked about is at the end of each month, there's a small hole in your bucket, and it's going to pay out monthly fees to the insurance company. And these fees are your cost of insurance. There's going to be some admin fees associated with it, and other fees the insurance companies have established. Now, these type of policies, if they're not structured correctly and they're not overfunded over the course of time, if they're not making the proper returns, will drain your cash value based on these monthly fees. Okay, and I will do a whole set of videos on how these type of policies work and how to properly fund these type of policies so it doesn't drain your cash value. So I want I'm going to stop here with this video because I want to leave you with a question. If you have a life insurance policy in place currently, is it properly structured to make you money?